Hello and welcome. This is Cashflow 2.0, the only podcast that walks you through the treacherous jungles of your financial statements and leads you on a path to not only overcoming some of the most costly mistakes that many new entrepreneurs make, but helps you make your money start working for you right now.
Sweet.
Join us today as Pam changes your financial future and makes finance fun.
Good morning. This is Pam, and I am so glad to be here with you today. Welcome to the Cashflow podcast. And this week we are going to be discussing the first in a series of 4 episodes focused on what I'm calling the See Your Cash Forecast. And this is for startup entrepreneurs. And the reason I'm going to go into this in some level of detail is because this is the one consistent thing that every entrepreneur I talk to comes back to me with. They say, I just can't see my cash. They use different terms for it. Some say I can't forecast it. Some say I can't project it. Some say I can't have visibility into it. And others just say very plainly, I have no idea what my bank balance is going to be next week. But in any and all cases, this all comes down to creating what I call a See Your Cash forecast. So I actually think this is so important that I'm devoting 4 episodes to it. Today, we're going to talk about why a See Your Cash forecast is important, and I think this will really resonate with you because I've got an example of each of 4 reasons that are so key that you be able to see and know what the cash balance in your bank account is going to be. Then we're going to have 3 episodes after that where we're going to give you incredibly easy exercises. It won't take you more than half an hour to go and really get the components that you need to have in place to build out a forecast. I really want every entrepreneur to not have to worry about visibility into their cash flow. So we're going to take 4 episodes out of this season to address just this because it's so important. So the 2 things I want to cover off on today are why do we need a forecast and can it really be as easy as it sounds? And I'm going to attack those in reverse order. So let's talk about can it be as easy as it sounds? A lot of times when people are used to hearing about forecasts, they think about really large companies, multi-billion-dollar companies or mid-market companies with venture capital type investment and that sort of thing. And it's true. They do have forecasts and they are complicated. I know that because that's what I did for 25 years was forecasting for multi-billion-dollar and then much smaller VC-type middle-market companies. So the neat thing about the fact that they are that complicated and that I've spent 25 years doing it is that I'm able to say to you that the concepts for those forecasts, for those large companies, are exactly the same as the concepts for a small entrepreneur, and I use them myself in my business. And the cool thing about it is not only do the same concepts apply, but they are so much easier to implement. And that's what I want to get at today. They're so much easier to implement in startups and in entrepreneurs' businesses and smaller businesses that just don't have that same level of complexity as the multi-billion and even the mid-market companies do. So stick with me here through today and through the next 3 episodes after this, and we are going to get you set up with what you need to be able to have visibility finally into what your cash flow is going to be. Okay, so I want to start with what is a forecast. And the reason I call it a See Your Cash forecast is because in my mind, and this is from the same experience I just talked about, all the way down to my own business, if you can't see how much cash you have in the bank, you can't run your business because cash is king. Cash is what allows us to play in the marketplace, to sell our thing, whatever that is, and to pay other people to help us sell our thing and generate our thing. And by thing, I mean whatever the gift is that you're putting out there to other people that adds value to them or to their business. So it's your superpower, it's your gift, it's your specialty, it's your zone of expertise, your zone of genius, whatever you want to call it. We need to be able to know that we've got the cash to mix up with our talent in order to get it out into the world and make the sales that drive the engine for our business. So that's what a forecast does. That's what a See Your Cash forecast does. And you will hear me focus on the fact that a forecast isn't really all that useful unless we can actually see what's happening with our cash. And we're going to talk about how to do that in the next 3 episodes. Today, I want to talk about the 4 main reasons that a beginning entrepreneur or an early stage entrepreneur wants to have this visibility. And one of them will probably resonate with you, and that's great. Multiple of them may resonate with you, but I'm going to address them in order of the stages of your business, of a typical startup business. We come across 4 types of problems over the initial years of our business that a cash flow, see your cash forecast can help with a lot. Not to mention being able to just get sleep, because that overall gray cloud of worry goes away. So the first thing that most businesses will run into is debt of one kind or another. So we're going to start with that. The second thing businesses will run into, or owners will run into, is feeling like the other shoe's going to drop on them, right? They feel like they're just not going to, it's beautiful, things are wonderful now, but it's not going to hold up. That's the second thing we attack with a see your cash forecast. The third thing we attack with a see your cash forecast is growth. Because now at this point, once you've gotten yourself convinced you actually do have a business and an engine that's going to continue to chug along, now you want to grow it. It makes complete sense to do that. And then finally, the really cool problem of taxes. And the reason I say that's a cool problem is because taxes become a problem once you're profitable. So that's a pretty awesome place to be, is profitable. It's one of our goals. So let's walk through those one at a time. And we'll start with debt. No matter what it is you're doing, if you've got a business, you have or are getting some money to run that business. You have to have some cash to mix together with your talent so that you can create the thing you create to get it out into the world. Whether that's to build it, to market it, to run it, or just to establish it, any one of those 4 things, you're going to need money and cash for. So right out of the gate, you're going to either have somebody investing in you or debt of some sort. And I'm calling this debt or investment. So why do you need to see your cash? Why do you need to see your cash forecast as it relates to debt and investment? I'll give you an example from one of my clients, changed the name and the numbers to protect the innocent. But she had started her business using 4 credit cards, which is not uncommon. So a very practical thing to do, as a matter of fact, in her particular case, because she moved the debt from card to card and avoided paying interest for 6 months or a year on each of the cards. But at some point, that came to be something that required interest payments. So the expense of that interest had now gotten to be, $600-700 a month, let's say. So once that's happening, it kind of flies under the radar unless you're very aware of it, and more importantly, aware of what you can do about it. So this is one of those situations where you see the cash balance in your bank account going down and down and down, but you don't see your debt going down by quite as much because so much of it's going to interest expense. So what does a see your cash forecast do? Why is it important for this particular situation that a lot of us find ourselves in at the beginning? Is because one of the things we want to do is get rid of that interest expense as soon as we can. And that's what doing this very easy to build forecast does for us. It lets us see the order in which we want to pay these cards down, because you always want to pay the highest interest first, down to the lowest. And then it shows you, how quickly you can get that interest expense back to reinvest it in other things in your business. So when you pay down that first credit card to 0, that interest expense for that card, let's say it was $200 a month, all of a sudden you have $200 a month you can spend on something else. You can invest that in a hosted service that you wanted to get. You can invest that in, by hosted service, I mean, an automated email system, or Kajabi to put your training in, or one of those types of things. Or you can invest it in some Facebook ads, or you can save it to do some sort of training that you want to do inside your business. But the point is, you can see when you're going to get that money back. And that's a very important thing to know as a startup entrepreneur. So that's the first step. What's the second step? The second thing that makes a see your cash forecast so important is a feeling that almost every one of my clients has had and shared with me. And that is what we call the other shoe's gonna drop syndrome. Just so many people share that particular other shoe's going to drop mentality. And it's really nothing more than not having certainty of any kind, not even partial certainty, if there is such a thing, of what their cash balance is going to be month to month to month. Because they have made revenue, they see it going into their bank account, they see themselves spending money to keep that revenue coming in to their bank account, but they just don't have the confidence that this is all going to hold up. Something's going to fall apart. So what I actually do once we have a forecast model for my clients is say, okay, I'm not going to take that away from you. I'm not going to take away the fact that you worry about that something happening in the other shoe dropping. We all have different levels of fear and worry in our lives, depending on all sorts of things. But I'd never want to just disregard that or poo-poo it or say, hey, you shouldn't be worried. Things are going great. What I do instead is walk right up to that fear and help them realize it's nothing to be as frightened about as they thought. So we actually map out, I tell them to sit down and tell me what is the worst case thing you can imagine happening to this business. And then what do you think are the consequences of that worst thing happening? And it's usually I have no more customers, and so no more money's coming in, and then I can't pay my bills, so my credit rating goes down, and then I can't borrow more money, and then I can't put food on the table, and then we starve, and then we're out on the street. Some form of that argument is what happens. So I say, okay, good. And we start with the very first statement, I'm going to have no more customers. And I say, okay, now if we put that into a forecast, and you're going to know that you have no more customers, let's map out what that looks like on this forecast. And look at all the control you have now, because now you can see all the things you can do in that forecast, all the things you can do, not in the forecast, but that the forecast tells you can do in your business to, number one, very first right off the bat, prevent the customers from falling off the page, which probably isn't really realistic at that point anyway, that they're going to truly fall off the page. But it lets you see that that's not realistic, and it lets you see how you can react to it, and it lets you know with confidence that we can build you a business where you don't have to believe the other shoe is going to drop. And just getting that see your cash forecast in place helps us so much get closer to making that horrible gray cloud of the other shoe's going to drop go away. So that's number two. Number one's debt. Number two is taking away the other shoe's going to drop mentality. The third is growth. So now you've gotten through the oh my God, I have to pay off my debt, and oh my God, I need to build a business structure that's going to survive. You've done both of those things. So now the natural next thing that an entrepreneur wants to do is grow. And in order to grow, you're going to need to spend money. So this is kind of a very obvious why for a see your cash forecast, but you need to know how soon and how aggressively you can spend cash to grow. A lot of people make the decision about growth before they look at a see your cash forecast. And in doing that, they overlook a lot of things that can trip them up financially, but it's always around timing, right? So you're probably right, you can grow your business. You're probably right, you can get more revenue. Those are all legitimate assumptions. But what people don't dial in until we put it on a forecast is the timing of each of those things. So you're going to have to spend money before you get money. And that always makes us nervous as entrepreneurs, right? And I've had more than one client say to me, I need you to tell me how much I can spend. And that's really what a see your cash forecast does. I'm not giving them an allowance. I'm not giving them permission. I'm just taking the information that we have in their forecast and saying, here's what it comes out to. If you do this, this is how fast you'll grow, and you won't negatively affect your cash flow. So growth is another very important thing that business owners need to understand, that a see your cash forecast helps them understand. And then finally, what I call the great problem to have, which is a strange thing to say about taxes, but the great problem to have is the tax problem. Because if you have the tax problem, you are profitable. And being profitable is probably what we're all in business for. Now, I do understand that there are not-for-profit businesses out there, and that's totally fine. This applies as well. But once you determine the taxability of your entity, if you're a taxable entity, this fourth thing will apply. Okay? And the thing about taxes is they sneak up on you. Without a see your cash forecast, they sneak up on you. And I have talked to so many people who get to April after a fantastic year where they've had profit and they get their tax bill. And because they've spent their cash on other things, growing the business, paying themselves, giving to charity, whatever it might be, they don't have the cash to pay that tax bill in April. So there's the worst case scenario, is you don't actually find out until your tax accountant comes back to you with the tax return that you've got a problem. But even beyond just preventing that problem, having a see your cash forecast, if you think about it, not only prevents that, but it allows you to do two other things. One is it allows you to try and reduce the amount of that bill with logical, sensible, ethical, and legal ways of reducing that tax burden. And I really look at that not as cheating the government at all. All you're doing there is using the system, legally and ethically, to keep more of that money in your pocket to do with it what you think serves the world. Whether that is to give to a charity, or invest in growing your business, or invest in your child's education, or whatever it might be. What's so insidious about taxes is it is your biggest expense, most likely. And it's the biggest expense you've got in your business, and it's completely under the radar unless we put a forecast in place. And that's why it surprises so many owners. So the third thing, the other thing around taxes is that it can also make sure that you're paying it quarterly like you need to be if there's income tax. Otherwise, what happens is when you get that April bill, not only do you get the bill for the missed taxes, but you get penalties and interest on top of that. And a lot of times those come up to be as much or more than the actual tax bill yourself. And to my Canadian friends, this applies to GST and HST as well. So we just don't want to have those surprises at year end around taxes. So, hey, yay, and cool that you're profitable, but you're not beyond needing a see your cash forecast at all. It's still just as critically important. So those are the 4 big reasons that we want to stick around for the next 3 episodes. The first episode, we're going to talk about a quick exercise you can do today to do a quick forecast of your revenues, what's coming into the business. Then we're going to do a quick exercise that you can do around your expenses in the next episode after that. And then finally, we're going to talk about putting it all together into something that's incredibly useful for you. So stick with me for these 4 episodes. It's probably the most important thing I have talked about in any of my content, which is why I'm doing this via Facebook, via podcast, and every which way I can, just so that we can get entrepreneurs to understand it is not as hard as it sounds. We are small businesses. We are entrepreneurs, anywhere up to $1 million, $2 million, even 8 figures in a business. These are very practical and easy things to put in place, relatively speaking. By relatively, I mean what you've heard about forecasts in large companies. And it's so important to have in place at every stage of your business just to up your confidence game. Our whole point, if you remember me talking before, is to give you numbers that let you understand definitely what levers you can move in your business to change an outcome. If you're looking at numbers that don't do that, then you're looking at numbers for no reason. You have to be able to act on the numbers you're seeing. And this forecast, this See Your Cash forecast, is one of the best tools in the world to give you the confidence to act as a business leader. So I hope you have a great week. I hope that you join me in next week's episode as well. And please give a like to this podcast or review this podcast. Give it 5 stars if you loved it. And I look forward to seeing you in the future weeks. This is Pam from Cashflow Season 2.